As I was saying, when I was preparing for this session for the Kenyan market analysis, there were two elements that I had to pay attention to. One, for someone mostly based in Uganda, but also those who are not in Uganda who are trying to diversify into the Kenyan market. And so, whereas the opportunities we have in Uganda and Kenya are almost similar, the question is, what comparative advantage does the Kenyan market truly present versus the Ugandan market? That as a Ugandan, when I'm in Kampala and I want to invest in the Kenyan market, do I just go and I invest in everything in the Kenyan market, or there are things that I can take care of in the Kenyan market and some opportunities I stay in the Ugandan market? And because we are talking capital market, so in the Kenyan market we are talking the stocks and equities, we are talking about their treasury bonds, we are talking about their money market funds and their special funds, even their real estate, by the way. It's way much better and much developed than the Ugandan market, especially the short-term stays. And if you're trying to buy apartments, I know a client of mine here who recently chose to buy in Kenya versus Uganda when they wanted to buy their first apartment, and they had to buy in Kileshwa. So the Kenyan market has its opportunities. Now let me start from what I need for us to take out. Let's start with the treasury bonds. The treasury bonds in Uganda versus in Kenya, they are almost the same. I will use the word similar. But long run, you have a higher chance of making money in Uganda than in Kenya. That's one. Two, the treasury bonds in majority of us right now are invested in treasury bonds in Uganda. So in Kenya, we are not. So if I have a higher chance of making more money in Uganda on treasury bonds than in Kenya, then I wouldn't want to go to Kenya, and my first option is treasury bonds. So that's one. Two, the money market funds, the unit trusts, they are the same in Kenya and Uganda. Actually, the Ugandan unit trusts earn more money than in Kenya. So that also rules it out. Then it leaves us with two opportunities which I want us to focus on: the equities market and the special funds. The special funds in Kenya are a booming thing. The Oak Fund, this Mansa X, we read about them every single now and then. Some of us, and you're like, yo, when are these coming to Uganda? Hopefully one of these days, one of them will launch them. So we don't have them in Uganda, so that someone who wants to get a little bit of exposure to the special funds, they have to go to Kenya. Then also maybe the other thing which I didn't talk about, the Kenya, the Sharia compliant funds in Kenya. They are much more in Kenya than in Uganda. Also, Kenya has the real estate investment trusts. They are not in Uganda. The rates might come soon, but they are not yet. We don't have them yet in Uganda. But for this discussion, allow me to first focus so much on the equities market, because that's a low-hanging fruit for all of us, that you literally can start investing in the equities market in Kenya like yesterday, like on Monday, if you make the decision to invest. Whereas in Uganda, our equities market is literally made up of literally 5-6 companies that can easily make money. And you can list them on your one finger. You say, okay, what do I have? We have Stanbic Bank. What else? DFCU. What else? Bank of Baroda. In the banking industry, you are done. Telecom industry, you list MTN, Airtel, you are done. Then there, if you are bold enough, you throw their Quality Chemicals because it's trying to recover. That's it. That's it. So on the Ugandan market, you are done with the equities market. Now, our friends in Kenya, it's a different, if I'm to use that word, it's a different monster altogether. The companies that are listed in Kenya are so many that it gives you the opportunity to take advantage of the market much better than it is in Uganda. And the return in the last 3+ years, every single year, the Kenyan market, stock market, has averaged close to 30% return in capital gains, capital growth. That doesn't even account for the dividends they pay. Almost every bank that you can think of in Kenya is almost listed. And actually, even those banks that are in Uganda, we're going to go through some of those, right? You can start with KCB Bank. Let's look at it here. Right? When you look at the KCB Bank, and I always want to come here to see how their price has been growing the last few years. If I do 1 year, you can see in 1 year that we are in July last year, the KCB was trading at 46 Kenya shillings a share. Right now it's at 80. That's double the money in 1 single year. One single bank like this. And this bank is in Uganda. It's not listed in Uganda. They are subsidiaries in Uganda, but you get the analysis, right? Even if you say that's 1 year, let's do 5 years. Now in 5 years ago, it was still at 44, it was at 80. So the growth between 5 years is still, it has doubled in 5 years, but also you can look at it that there was a downtown in 2022, 2023 when they were going through a significant election period that led to majority of their shares to go down. But since then, they have been on an upside. So someone who picked up KCB Bank 3 years ago and they picked it up at 15. Now let's take a step. When I was doing this analysis and I had to call the brokers in Uganda for me to set up my account, one of the things that I was paying in 3 years, you pick from 2023 to 2026, the Nairobi Stock Exchange has minted millions and millions for investors. For those of you who pay attention to the stock market or to the banking industry, what do you think has changed between 2023 and 2026 for KCB? For it to move from 15 a share to 80. Like, when you think about it, like, what has really changed from 15 to 80? That if someone had some money and they put a 1 million Kenya shillings in 2023, where would they be by right now, their value? The opportunities of the equities market in Kenya is where you should focus. I want you to think the bonds, but you have a bonds exposure in Uganda. So as you diversify to the Kenyan market, let's go to the equities market. Let's start with the companies that we are familiar with. Let's go to equities, equity group. There. Same thing. 3 years ago, it was at what? 40. Right now, it's at 86. 1 year ago, it was at what? 50. Now it's at 86. Growth. 70% growth in 1 single year. Yeah, it's close to 80. But we have Equity Bank in Uganda that's owned by Equity Group. And every single now and then, we read about these companies and how they are performing. So I'm starting with companies that I'm familiar, we know in Uganda. That even if I'm to go to Diane Blair and I say, I need you to buy for me these shares, you're buying a company that even if something happens, you can easily collect that information because it has presence in Uganda. Right? Then there is this company that I like these days, Britam. Let's look at them. Yeah, there, Britam Holdings. Britam Holdings is the owner, is the group controller of the Britam Uganda. Britam Unit Trust, the Britam Insurance, the Life Insurance, the General Insurance. So these companies have presence in Uganda. They make profits in Uganda and they repatriate them to Kenya, and all the Kenyan investors who have this make some good money. So 1 year ago, it was trading at 8. Actually, not even 1 year ago. We can do 6 months. I know I've been paying attention. We can do 3 months. That's the opportunities of the Kenyan market, of the stock market. Let's do 3 months. 3 months ago, it was at 12 a share. Now it's at 18. I think that's 50% growth in a 3 months period. 6 months, it was at 9. It's now at 18. 100%. That's double the value. 1 year, 8. It's at 18. 5 years. At one point, this price, I don't know if you can see my word very well. Let me make sure we can see it. At one point, okay, here. This was what? 7. It's at 18 in a 5-year period. For as long as the company is profitable, it will always find a way, and it's in majority of these companies. And the good thing with the Kenyan market, some of these companies are in the financial services industry. The financial services industry has one good thing. Companies will always turn around and they will make the money. Right? Its signature company, Safaricom. How do you talk about Kenya without talking about the Safaricom? Something isn't adding up on how I'm presenting this. It's not. See, something goes down here and I can't see it. I don't know if you guys can see it. No, I don't think you can. And yet I need it to demonstrate something on Safaricom. Okay. How do I... Why is it doing it that way? Give me a second. It's something that I wanted to indicate, but somehow my presentation is not coming out very well, so I'll try. You see, when I do Safaricom and I do, for example, 1 year, all you're seeing is growth. If I do 2 years, it's just growth after growth from as low as 15. Actually, Safaricom at one point reached almost 12 Kenya shillings a share to now almost 35. So there is growth. But there is something I wanted to indicate to you as you enter equities. At one point, Safaricom was as high as 50 and it came down and it went up. So when you enter the investment world of equities, there are going to be some bad days, there are going to be some good days. But I assure you, you will have, if you stick in it long enough, you will have much better good days than the hard days. You'll have much better good days than the hard days. And it's not because majority of these companies, as long as the fundamentals are wrong, are right, the company will, the trust and in the share value will start growing. And when you see the price going down, do not panic and sell just because you are seeing the price going down. Right? Sometimes you have to sit down and ask yourself, you know what? Is it making a profit? Yes. Is it paying a dividend? Yes. Is there a crisis that is threatening the coexistence of this company? And if the answer is not yes, then you do not sell. Because those who invest into it long term, they will see the benefits of that. Now you think about other companies. Let's go back to the banking industry. You think about Absa Kenya. Where is it? This one, Absa Kenya, Absa Bank Kenya. You can see, if we are to do the 2 years, we have moved from 14 to almost 33. So the last 3 years, the Kenyan market, and one interesting thing about the Kenyan market that I've loved following it, it's getting more and more mature. The investment analysts, investment advisors are holding people to account. They're holding the boards to account. There are more and more investment advisors. Now, for us who are Ugandans, the best way to do it, we're going to have to go through the brokers. I was trying to see the easiest way possible to invest into the Kenyan market, the Nairobi Stock Exchange. Dye & Blair is the easiest and the quickest way. If you go to them and register and fund your account, and there is much more float in the Kenyan equities market than there is in the Ugandan market. That to the extent that if someone wakes up and they say, I'm looking for $1 million Kenya shillings worth of shares of Safaricom, at the right price they will get them. Yet in Uganda, if you have 50 million and you say, I'm looking for shares of MTN, you might nash for days before someone even sells you half of that. So there is much more float in Kenya. And the transactions that the Kenya's market is executing are getting much, much better. We are all following the EABL, the East African breweries listed on the Kenyan market, right? We know Diageo wants to sell it to he wants to sell it to Ashash. They are in the courts, but at least you can see that the market in Kenya is so developed that it's even attracting that kind of capital. So when you think about it that way, that you're like, oh, let me go to the Kenyan market, I do not want us to focus on the bonds. Yes, the bonds in Kenya at one point they were very attractive. Of course they are. But the Ugandan bonds long term will make you more money. So if you already have the Ugandan bonds, do not go to Kenya looking for bonds. Go to Kenya looking for much more, something that is a little bit riskier, but with a higher upside. Something that has returned almost 25 to 30% the last 3 to 4 years. And for as long as the demand dynamics in the Kenyan market continue getting much better in terms of investors, the retail investors, that continues to drive the sentiments in the positive side. It continues to make sure that people will make money from that. The Kenyan market is so good that they have companies that are like, it's called Kapchorwa tea. I always confuse it with Kapchora, right? This is a company, if you are to look at it in 1 year, it has almost not added anything, but when you pay attention to it, you're like, wait a minute. A year ago, it was at 165 a share. Right now is at 339. This is a tea company that is listed. A tea company. That's how much their market is diversified. That they have agricultural publicly listed entities. The Mumias of this world. This is Kapchorwa tea. In Uganda, we do not have those. We do not have those at all. They have banks like the Cooperative Bank. Where is it? Where I see it? I can't find it. This really good bank in Uganda, I&M. There. Yes, I&M Bank is listed in Kenya. I call it a good bank because it's one of the few banks that have a good service. Lillian is here, she will attest to you, right? And the few people who have managed to open up bank accounts with I&M, they're really good. Their service is good. It's a listed entity. And the reason one time why these days I recommend people opening up accounts with like I&M banks, I'm like, guys, this, however much it's a small company in Uganda, it's a big company in Kenya, it's a big company in Rwanda. And you can see, in 1 year ago, their share was at 36. Now it's 68, almost double the value. What does... I can go on and on and on. Of course, now there are companies that have also lost value on the Kenyan market in the last 1 or 2 years. But when you look at their Nairobi index, their 10 index, the 20 index, the 25 index, all of them in the last 3 to 5 years have returned a positive, great return. 20%, 25%, almost every year for the last 3 to 4 years. So why I wanted to start from there and say, let's not go to Kenya looking for the exact same thing we have in Uganda, for which we make even more money in Uganda. Let's go to Kenya looking for something that is much better, what they do better than Uganda. And that is in the equities, the Nairobi Stock Exchange. It's where the actual gold is. We should focus on. Let me pause there for a second.